What happens when people can't pay their car bills? Well, I'm not talking about just one or two people. I'm talking about on a mass scale. In today's video, we're going to look at that. It's extremely important to see this for what it really is. You came here for the truth, so let me unveil that for you. We are looking at a canary in the coal mine right here and now. I'm going to break that down for you. What does it tell us? I think it's important to understand what's happening in the economy, what's going on with the Federal Reserve, and we piece those things together and make a whole bunch of sense out of it. And you got to remember that there was a subprime crisis. Well, there's another one going on right now. We'll talk about that here. Let's begin. I want to look at what's going on with electric vehicles. I want to look at what's happening with people's ability to pay for those electric vehicles, connect that in with the subprime, and of course, the wider auto market. There's a lot to connect here, a lot of dots. But once we take the time, the energy, the old school way to look at information, not in the soundbite format, not in YouTube shorts, then we start to realize, okay, this makes a lot of sense. Look at it. Even though the current administration has been pushing EVs on the public, including an offer of a $7,500 subsidy, less than 10% of all new car sales over the past 2 years were electric. And so this is important. It shows that while they want to incentivize electric vehicles, they're doing that, they're giving money out. It is not going very well, at least according to their plans. They want to get 2030. You're not going to be able to drive a standard vehicle anymore. They're going to increase the taxation on it. They're going to make it impossible in some cases to not be driving electric vehicles. Look at some areas. No, you have a regular car, you can't drive in the city center. I'm sorry, not going to be allowed. These are the kind of things that are happening right now. But understand the expenses that people incur for their vehicles. This is really what it starts to highlight. What's happening? Well, the average payment on a vehicle has been going up and up and up. At the same time, how long people are stretching that out for has increased as well. The debt payments on these things are unbelievable. The prices of the cars are going up. It's in every single category, inflation. You could tack it on here or there, service fees and all these kind of things, but ultimately at the end of the day, it means you got to pay more money. But what happens when you pay too much for something? Well, then you run into a big problem. I want to show you. Here we have it. I thought it was fake, but it's real. Give car back. Searches are at an all-time high. So if you go to Google Trends, you will see this and giving car back. Look at it. Yes, that's been going on for years, but more people are doing this. And it shows us that people are trying to lower their expenses. They've been paying $1,000 for a car and they're saying, maybe I don't need this thing anymore. Maybe there's an alternate. Maybe I can walk. Maybe we can just share a car. We don't need two cars in the house. There's a lot of different things. But here it is. That's one indication. That's a real world indication. But what about this? Subprime auto loan delinquencies hit a record. Prime loans are pristine after easy money ends the high risk, high profit business of subprime auto lending. What makes it work? Securitizing subprime auto loans and selling the asset-backed security to yield-hungry investors. Does that sound familiar to you? Well, of course, that's what happened during the lead up to 2008. Nobody seems to learn their lesson unless they learn it the hard way. This is really no different. They're taking debt that people have, they package it up, and they sell it off to investors. They say that it's diversified because that debt comes from maybe a range of credit ratings. Maybe it's coming, some is from Alabama, some is from New York, some is from Hawaii, who knows? They package it all up and they just say, no, not everybody's going to go bankrupt all at the same time. But what are we seeing right now? We're seeing record high delinquencies. This is beyond 2008. And of course, I did cover this recently, but I wanted to make it very clear. You could see on the chart right here, subprime and prime auto loans, 60 plus days delinquency index going higher than 2008 timeframe. And noting also prime, there doesn't seem to be a problem. What we're seeing though is that people are dipping into the equity of their home. They've got a lot of equity in that. And so they're pulling that out right now to be able to fund their expenses. So it's not as if everything is okay. There's patchwork being done. You're seeing the biggest problems end up in these areas which you would expect, the subprime. At the same time, we are watching people using their credit cards more now than ever before. We're seeing the payday loans, we're seeing the student loans, of course, coming back online right now. All things I've covered before, but now we're connecting the dots. And it tells us something very clear, that the economy is not as strong. But why? It's pretty clear that when you increase interest rates after being addicted like a drug addict to super low interest rates for a long time, well then, businesses, investors, and everybody in between have simply decided that we can't stand anything but low interest rates. We have to have it back. And so the demand has been there, and it's been clear that it's unsustainable unless we bring interest rates down to zero. If interest rates go down to zero, well then what's the expectation for prices? Think about that. If we do get in the next year, 2 years, if we have the curious case of money printing to infinity, we can expect that we're going to have a lot more inflation. I know that there are some that talk about deflation, and we could certainly have a deflationary event, but that deflation is met with an equal and opposite force, and that is inflation. So you throw a bunch of money at it and you kick the can down the road, but not exactly, because every time you print money, you devalue the currency, and the general public is worse off as a result. And that's what they want to do here, yet again. I want to talk about the changes, some industry changes, electric vehicles being one of them. Now, I know this is a hot topic. You can see the people who love Tesla, the people who now hate Tesla suddenly. You were talking about Elon Musk. Are we talking about getting rid of oil? People are concerned about the jobs. What are we doing here? There's a lot. It really does get into some heated arguments sometimes, but let's just look at the details. EV sales are in a slump. Why aren't more car buyers going electric? And they do get into some things here. Toyota, by the way, saying, you know what, we're going to pull back on this whole idea. Automakers are losing money on EVs overwhelmingly. If you look at it, whether it's Rivian losing $338,000 per vehicle that they produce. I just said that correctly. $338,000 per vehicle. And so that's a game you can't win, right? I mean, come on. What are they thinking? These businesses need a real sustainable model. Why average Americans aren't buying their electric cars? They're too expensive. Charging is expensive. Charging is inconvenient. And the depreciation, range anxiety, and so on. I think, this is my opinion, if you're the type of person that takes your car from home, you drive it to work, you drive it back, maybe you go to the store, maybe you go, one little place here or there, maybe to see a family member on the weekend, and all of those distances are short enough, then some people might say, over a longer period of time, I'm going to save money with the EV incentives, with this and that. I think it's better. Some would say that it's very convenient to always be leaving your house with a full tank. Sure, but there are definitely some issues. You go into some places, there is no capacity for you to charge. So what do you do? What if you get stuck somewhere? What do you do if you're trying to do a road trip? What if you're trying to go up north to the cottage? All these things. These are problems that people will encounter, and they're kind of saying, maybe not. So that's really piling up. At the same time, the cars can be more expensive. At least, depending on when you look at it, if you take apples to apples comparison, you're going to be paying more upfront, and people don't have that upfront cash right now. More alarm bells sound on slowing demand for electric vehicles. There's just more articles about it. On Reuters, just talking about the high interest rates playing an obvious factor. We know that. This is out of Seeking Alpha Premium, and I want to share that with you. Tesla is no longer deserving a premium price, and we've seen the stock really taking a beating over the last while. What they're saying here is now is not the time. The third point, now is not the time to pay top dollar for the promise of future earnings from AI-related projects. What I love about number one, what he's talking about here is something I have said before. Don't get into the hype. We want to know what's certain, what's here and now. Oh, that's proved. Okay. And this is the expectation over the next few months. Okay, we can go with that. But if it's something that's like way out into the future, we don't have time for that right now. Things are tight. Okay, we can't do this. And at the same time, I like the Seeking Alpha Premium. I like anything premium where there's a closed group, closed circle, simply because I'm not worried that this guy has to, SEO, search engine optimize his article so that it hits all the right keywords so the Googles can pick it up and so on. I want to know the truth, the information. I don't want that bias. I want to be able to get somebody that I can trust as a writer because they're pulling the right data for me. And so you get that with Seeking Alpha Premium. There will be a link in the description if you want to check that out. Very interesting. This is about Foxconn. Foxconn, they make Apple iPhone, the MacBooks, iPads, whatever, all that stuff. Well, they have approximately 1.2 million staff. Foxconn is the third largest private employer in the world, behind only Walmart and Amazon. And so they talk about the different sites. I found it to be very interesting. What's different about this right now is that they want to produce vehicles, parts of vehicles, or even the whole vehicle. And what they say is they will be able to produce the vehicle better, more efficiently, cheaper, faster than what a traditional manufacturer could do. And so the way that manufacturing is done is changing, and you could see one company losing a lot of money on it, but another company could be producing that at much lower levels. Of course, there's economies of scale, there's different reasons for it, but you've got to know what Foxconn is up to. You're seeing a lot of these Chinese EV companies, they're struggling in their own way, but they're producing a lot right now. And I think that this could be one company that might be the way, like where the outsourcing is the way that this gets done, and they push this out. Why do I even say this? Why can't we just say, no, EV is not going to take off? Because there are articles being written saying EVs are a flop. Maybe. But the way that they're going, the way that they're moving is they're basically saying by 2030, if you're not driving an EV, you're going to be walking. I mean, they're making some bold statements. I don't know if that's going to be everywhere. I don't think all places are going to go with that. Anyway, I think it's important just to see the trend there and what they are pushing everybody into. Just be aware of that. Okay, important stuff. At the same time, I just thought it was interesting and related that offshore wind farm cancels New Jersey projects as industry's prospects dim. Many of them are just sitting there. They're just doing nothing. They're not producing anything. They didn't work out. And of course, with any technology, this happens. But we've got to be honest about this. And that's why I just wanted to highlight the fact that don't think that just because something is part of a new technology or what have you, that you should be putting your money into it. We need to be smarter. That goes for the green technologies. Be careful what you invest in. And AI and all these different things. You got to do your due diligence. There's no question about it. If you want to know about Seeking Alpha, if you want to get the 7-day free trial, go to the link in the description. It's going to bring you over to my website. You can watch this little video, click on that link, and see for yourself. And the comment of the day, I love this comment of the day. Thank you very much. As always, one of my longtime subscribers here. It is hectic how a dollar costs 16 pesos in Mexico. It used to be 20 months ago. And that's so true. How we have seen not just for Mexico, but other places versus the US dollar. I mean, people are suffering under inflation. It's unbelievable, really. And I hope that, things can calm down, things can clear up. But what I expect is more inflation everywhere, just based on the debt that's out there and how they're going to fix the problems. So be mindful of that, be prepared for that, and understand that this is what the central banks love to do, and they're going to do it. All right? I hope you appreciate this information. Hit that thumbs up if you did. Of course, I want to see you back here tomorrow. Each and every day, I bring you the latest and greatest. See you then. Take care.